Welcome to the market recap presented by Tackle Trading. Get in the game.
Good afternoon, Tackle Traders, and hello, YouTube. This is Frank coming your way with the market recap for the 15th of November. We're hanging out on a Thursday. It wasn't boring. There was definitely some movement in the market today. After kind of a rocky start to the morning, bulls finally realized that they better step in, and they did. Good afternoon, Fortino. Good afternoon, everybody. We'll get going here just a moment, but hopefully everybody had a good day trading, and it was interesting. It was interesting. And how about natural gas giving back basically everything that it picked up yesterday? What a wild 2-day ride if you're just a position holder on natural gas, right? Hopefully, if you traded natural gas, you took some profits early today. So I still wouldn't have dared bet against natural gas as it was selling off today, but it definitely did sell. Taking a look ahead to the earnings docket for tonight and tomorrow, we do have a handful of S&P companies, NVIDIA, Applied Materials, and Nordstrom's all reported after the market close. I didn't have a chance to take a look at any of the reports if they were even out, but in the after hours market, all of them were trading down for whatever that is worth. We'll have to see how they open, of course. And then you have Viacom and what the heck is their name? HP. Heinrich and Payne coming out tomorrow before the market opens. So we do have a handful of S&P companies. Not huge names, but certainly NVIDIA, Applied Materials. These aren't tiny companies, right? These guys are all right size. So we'll see how the market responds to their earnings here tomorrow. Walmart definitely kind of looked like kind of a mixed bag. I didn't do a deep dive into Walmart's earnings, but it seemed like it was a little bit of a mixed bag today, closing down a fair amount on the day, at least for Walmart. So, but taking a look at our indexes, here we have the S&P. And much like yesterday, we pierced that support level, and it was looking pretty bearish at a certain point this morning, on the S&P's chart. And then I think the market is maybe it's grasping for straws. I don't know, but I heard the magic words. Maybe there's an end in sight to some of the trade war stuff. I don't know if there is or isn't. I doubt anybody else knows, at least little folks like us. But the market definitely wanted to hear something good. And it did. It took it as a positive, and we really rallied off of that. Over in the S&P, I think you can look at it a couple of ways right now. We clearly didn't break. So while it's been choppy and it's been volatile, and we've definitely breached it on the intraday, we've been able to hold this support zone. It's held up a lot better on the Dow's chart, I think. But I think when you think about support more as a zone than a number, we can say that this did hold that, at least as of right now. The real question is are you interested in if we continue to see upward movement? Again, that we need to see that, right? Otherwise, it's just a day, But assuming we start to see some upward movement going into tomorrow or into early next week, are we interested in playing into that as we try at least to work back up to that resistance level, or are we not? And if we're not, that's fine. This can be a tougher market in a lot of ways for directional swing trading. I think a lot of people would feel, but I think as long as we continue to hold this, and again, we can kind of use this, and I think we have to right now, kind of use the S&P and the Dow Jones chart kind of side by side instead of individually, because of where that support zone is. If we can get the clean break on both sides, like we were talking yesterday, I do expect more downward movement. Just because we had an upward day doesn't mean I've changed my mind on that, but we're a lot further away today than we were this morning or yesterday at the close, right? I still continue to like the Dow better because it is cleaner in my opinion. Interesting thing that we potentially have, and this is something that bulls can potentially try to hang their hat on. Again, we need a little more upward movement in my mind before we can even start to have a real conversation about this. But it all starts with day one, right? There's always a day one, whether this ends up being it or not, that we have placed that higher low. And when we're talking about the Dow specifically, we've already placed that higher high. So if we just look at the Dow in this time frame, this doesn't look like a bad looking chart at all, right? Went up, pulled back, made a higher low, some buyers stepped in. To be continued, right? So this does continue to be the index that, at least personally, I think is holding up the best. I would say the S&P is second. Behind that, I really think, though, when we're talking about, really being bullish, not taking bullish trades, but being bullish, for me, you've got to get it back above these resistance levels. So while there definitely might be some interesting potential opportunities in the middle here, for me to say I'm bullish, we've got to take out resistance, and that's a ways away. We got to get there first. Over on the NASDAQ, it bounced back, closing kind of right at the top of about where it topped out yesterday, right along lines with that little swing over here. Again, you can kind of make a similar case with it to the Dow, but when we take the broader picture in mind, the Dow actually, to me at least, looks a lot better. These guys, it hasn't broke support. It, I guess, breached it technically on the intraday, but to me that's why a close is so important. Looking here, I mean, again, we could say the same thing, but again, for me, I'm going to like the way that Dow chart looks a lot more, every single time. So, but we did catch our footing. If we're trading into tech, I mean, we know that it has been showing relative weakness. That doesn't mean it has to in the future, but it certainly has been the last little bit. Just keep that in mind. Obviously, I'd rather see it work its way back to support. But again, I'm always trying to trade into what at least I believe is the most strength possible. And I don't think that's the NASDAQ right now. And I definitely don't think it's the Russell right now. I still don't think there's really any case to be made on the Russell from a bullish point of view. I could see a case for people taking, covering their shorts and closing bearish positions, especially if we see more upward movement tomorrow. But as far as a buy, I mean, we've done nothing, right? We went up with the market, we rallied with the market, but we've not broken any resistance. We've not done anything along those lines. So in my mind, really, the Russell is just going to be one of those that there's a lot that has to do before I'm going to change my tune on it, and so we'll see how that plays out. Taking a look at our sectors, I was very happy to see exactly lower highs, lower lows. I don't try to get cute, Fortino. I just want to go with the flow. I want to make my life as easy as possible. And if you're, not doing those things, if you're not putting in those higher highs, higher lows, or lower lows and lower lows, depending on what trend I'm looking at, I don't have any pride. So I don't have any pride at all when it comes to that. If I don't know or I don't have an opinion, I'll be the first to admit that. Taking a look at materials, I really did kind of like the way that this played out today. We watched it kind of use that old support zone here as its low point yesterday. Really saw a lot of momentum moving back into it today. I still think, again, just like I'm going to think on almost everything I look at, the signal really isn't until we break resistance. But again, this is kind of step one. Hey, have we put in that higher low? I tend to be looking towards that. I feel like that's what I would like to happen, and I am watching for it to happen. But of course, we still need to take out resistance. But definitely a good start. Very strong day over in materials. Energy, we're just still in the same place as we were yesterday and the day before. We are right at that support zone, which is a little easier to kind of digest maybe as we look at it on a longer time frame on the weekly chart. It's volatile, right? And it's holding that support level. I guess it probably comes down to this. Same thing it probably came down to yesterday, maybe your day closer to potential entry, or I don't know. But do you trust this support level to hold? Do you feel it's worth the risk? It is quite a bit of support, and at least as of now, we are holding. I don't like how we got there. It's not for me. But again, as I will always say, I get it. I can understand why someone would buy it here with a stop loss down in here from a pure risk to reward point of view. I just think it's not what I would call, it's kind of scary to me right now. So I guess, I'll respect that support always, but I'm not going to, I don't think I'll be playing off of that personally. Now, looking over in the financials, nice and interesting bounce back day, another strong one. Materials, financials, these are areas that, right or wrong, I've been, in healthcare areas that I've, kind of liked a little bit more than certain other areas. And I did find it very intriguing that just like yesterday, it kind of came down to that low point that we've been kind of monitoring. And that once again, it held and we really bounced off of that. So again, we're starting to see these potential patterns develop, right? We're still way early in the game. And I want to get excited, but I know better than to get excited that it's going to, that it has to do anything. But we're starting to build this where if we can continue this momentum and take out resistance, again, much like the Dow, it just looks a little bit different, right? It looks a little different when you kind of take a, more of a bird's eye view on it. But a good step, a good step in the financials, a strong day, regardless of what your personal opinions are in the financials for sure. Over in the industrials, they kind of are starting to trust this floor. I still, again, for me, I don't think there is a bullish play. You can kind of start to potentially make that same case. But again, relative weakness, much like the Russell, they haven't done anything. They haven't broken resistance already, given us no signs, at least giving me no signs, at least, that they're ready to turn trend. So for me, the buy has to be on the break right now. And again, we can kind of watch it develop. There's still room to the downside if this is just a snapback day, which wouldn't surprise any of us, right? We've seen that a few times as of late. So, industrials is an area. Obviously, I'm not going to be thinking it's a bearish entry point today. And again, I'll kind of respect that upward movement. But if we do kind of reverse, and this is just one of those snapback days, then a break back down, there's still, in my mind at least, room to the downside if that's the way that things play out. But right now, we do have to respect the support level. So even if I think this is a great bearish opportunity, I'd have to get below today's low before, at least as of this moment. Now, probably change tomorrow, but at this moment, I'd have to break today's low tomorrow to even potentially get in. I don't see that happening, and I don't see me jumping in if it drops that much anyway. So, but it'll be interesting to see. NASDAQ, well, hey, one and the same almost, right? Tech, nice bounce back today off of support. Of course, it was kind of the first sector, at least, that was testing support. Well, I guess kind of tied with energy, I guess you have to say, but a really nice bounce back day. Yeah, Ed, you betcha. Moving averages certainly can create resistance, and that's one reason why I always have them on my chart. I think in them in terms of challenges a little bit more than resistance, Ed. So instead of thinking that the 200-day moving average is resistance or support, I think about it a little bit more as if that's going to present a challenge. So looking at, just looking at tech today, it ran right into my shortest term average, the 9 EMA, and while it didn't sell off much, that was the high point for the day. So that's kind of the first challenge. And then, in this particular case, the 20 is going to be a challenge, followed by the 200 and then the 50. So I will kind of treat it the same way, Ed, but I guess at least personally speaking, I look at it a little bit different. I know a lot of people, myself included, do like and respect and use moving averages. Not everybody necessarily uses the exact time frames that I use. I know that, but they are a fairly, common indicator. And I do think, personally, I think they're the best indicator, but that is just, of course, very subjective. So, I don't think there really is a best indicator. It's just, what one works best for you. But that's how I will see them. And does that make sense? Instead of thinking about them as hardline support and resistance, I always like to try to simplify things to the very end. What if everybody thinks that my moving averages are just dumb and no one respects them? Well, I can still trade if I got rid of all of them through price action. That's why I'm always looking at the price first. And yes, I'll bring up moving averages if we're approaching, a 200 or something like that. But just taking out all of the moving averages, the price action is the same. And so, as they say, price is king. We all have price in common, regardless of how little or how much you think about the 9 EMA or whatever moving average I use. You can't argue that we did hold support today on tech. You could argue that it's going to be short-lived and you're still watching for it to break down for a bearish opportunity. Fair enough, but the price is the price. And at least as of today, we did bounce off support. So that's the way I like to think about this stuff. I try to keep, my biases out as best I can. We're all human, and certainly I am too. And so, but that's the way I kind of think about those moving averages. And it'll be interesting. Again, this is one of those, I think it's tough now. All of a sudden, with such a big bounce off of the support level, I would understand people buying off of that support level. But the problem that I have specifically right now on the technology sector as a whole, not individual stocks necessarily, but as a whole, is because of the upward movement off of that support. This all of a sudden becomes a very expensive trade, right? If you just think in terms of risk to reward, we're buying well above 68. I would argue a stop loss would be somewhere in the general vicinity of $66. So we're looking at a $2.50 approximately risk. If I were to take a directional swing trade on this, that's about the general way I'd be setting that up. So even if I really believed, do I really believe it's going up $5, and getting, back above the 50-day moving average on this bounce? No, not enough to put money out there that it is. So, if it was a little smaller candle, and we were buying, say, at 67 and change, well, my stop would still be in the same location. Now all of a sudden I'm risking it, a dollar, and I'm not asking it to go so far, but it can move up just back into the 200. I'd have a pretty good risk to reward. So whenever you see something like this, even if you wanted to play the bounce, for me at least, it becomes very difficult because the risk to reward's just gone, at least as of right now. But we do have more information. So hey, we're not guaranteed to just spring right up off of today's upward movement, right? By any means is that a lock. And so if we work our way back down to it, we can kind of, maybe believe in that support level a little bit more if that's the way that it plays out. But a nice bounce back day. It needed it. And the market really needed this. We kind of talked and looked at yesterday. So many things were kind of right on those, by those support levels, or right sitting on top of them, that were kind of last lines of defense for many things. We really, at least bulls really needed today's win. I really think they needed today's win. In the industrials, we already checked them out, went backwards. Staples pulled back. I don't know if you guys saw this on the intraday. It's pretty hilarious. It kind of pulled back. Yesterday was kind of sitting on that, little resistance level, and anything that's kind of, hot like this, you always expect people to look for an excuse to buy it. At least I do. But it continued to sell off with the market early, and then came back down into the 20-day moving average and that old breakout point, and really just hopped right up off of it. And so really took off. That's a pretty interesting candle. I wish it would have been a little bit smaller, but a pretty interesting candle because, we're in a nice upward trend. We've had a pullback, formed a hammer candlestick off of old resistance, new support, the moving average. If we're to see some upward momentum, I think some people would call that a trigger into a bullish pullback. And I wouldn't argue with folks that were looking at it from that perspective. The charting platform that we're using, that I'm using right now, is the TradingView platform. I just, when it comes to charts, I tell everybody beauty's always in the eye of the beholder, and you use what you like for your charting. Some people, like Coach Mark, I know he uses the profit charts, and a lot of people make fun of him, but he just likes the way they look, and it just helps him read the market better because he likes the way they look. And I'm kind of the same way with this platform here. So it's, that's really my criteria when I'm talking specifically about just a charting platform. Do you like the way the charts look? And that's really, really subjective, and eye of the beholder stuff for sure. So utilities, another rough day, 30% more down for PCG today as that thing goes from bad to worse. If you ever didn't believe in don't try to catch a falling knife, PCG probably will make you a believer. Definitely selling off in the utility sector here today, bouncing off of the intraday lows very significantly, but really, gave up off of that battle at resistance, at least short term. But we did see a lot of momentum come back into it. Again, sometimes you can find it helpful to kind of watch that rally up off of, how does it respond to that intraday low? Big sell on the open, caught a floor, and then kind of went into a sideways. So if you just think about this as a chart and not a 15-minute chart or anything like that, this is one of those things that, hey, we get a little more upward movement. We would call this a breakout, right? If this were to break above here, maybe we would take a trade on it, maybe we wouldn't, but that's what we would call it, right? Because it's established a clear line of resistance. If we break, that would be a bullish breakout. That's kind of how this candlestick developed, right? So if we can see some more upward movement going into tomorrow's open, I could see people, happily moving back into this sector, taking another run at that resistance level. We obviously haven't seen that, but we have seen at least some positive shift on the intraday here today. If it's not going to break resistance, come back to support, reset, run up and try again, right? We've been watching it to try to break resistance for what seems like forever, and just wasn't ready. Maybe it never will be, but taking a little reset, pulling back to support, pulling back to make a higher low, and taking another run at it instead of just hanging out up there forever. At least it makes it more interesting to talk about, right? So, if nothing else, over in the healthcare sector, another one of my favorite sectors, right or wrong, really nice bounce off of that low point here today as well, followed by some pretty strong upward movement on the price action. Again, we're kind of, it doesn't bother me because this wasn't really part of my game plan, is playing the support bounce. Not right now, not in a volatile market. You have to give these things so much room because there's so much whipsaw stuff going on. But had I been, and that's just today, that's not always the case. I really dislike when, our, reversal candle days, or our first, our step around days, whatever you want to call them, move up so much because the risk to reward just immediately disintegrates. I do personally, gun to my head, I would bet on this support holding and us working back to resistance. Now, thankfully, I never have a gun to my head when I'm trading, but that is what what I would do if I had to take a trade on this. Problem is right now, again, much like technology, to take this trade, my risk to reward is a buck to risk one to make one at best. And on a directional swing trade, that's not good enough, in my opinion. It doesn't really bother me this time because, again, I do think our real signals in the market are going to be the breaks of resistance. We're going to have opportunities and things to do if we want to do them in between, if that's the way it plays out. But for me, the signal is going to be the break. The good signal is breaking resistance up here. And I will continue to look at it through that perspective as long as we hold the support level, right? That's always the caveat. Over in the discretionary, when it broke, things, broke early and kind of on a gap down in a lot of things in the market, kind of cheated a little bit, kind of sold. We really saw some movement to the downside on the discretionary sector before we caught our footing and shot back up very nicely. We did rally and respond very nicely off of that vicious, selling. Again, we'll go look at it on an intraday to kind of illustrate the point. I mean, a gap down and then an immediate sell. I mean, that's ugly, right? Then it kind of rallies back up into what could have been an intraday bearish retracement, starts to fade, but then ultimately broke resistance and then took out the opening high there, and the rest is kind of history. Again, for me, I could get it. I could definitely understand wanting to move back into it here because, again, right or wrong, this is one of those areas that I do think if we get the Christmas rally or the Santa Claus rally, maybe I'm just a simple dude, but I think this is one of those areas that should benefit if that's what happens. And so, this could be an interesting area. And while I wouldn't necessarily trade the sector ETF, the sector ETF chart right now is it's rocky. I mean, we've got, lots of stuff overhead, challenges and moving averages, resistance levels. Again, I do think the real buy signal is way up here. That's the hard part, is being patient and waiting for it sometimes. Individually, if we continue to see upward movement from an overall sector point of view, if I do have an individual stock within this area, I would be very open to it, personally at least. Real estate, big sell-off, caught its footing and bounced. So again, we kind of been looking for it. I think a lot of us have kind of looking for it to pull back to that breakout point. We came pretty darn close today, kind of like we did in staples, and then shot up off of it. I don't really care all that much. I'm not a huge real estate trader. I watch it, I monitor it because I want to be the one who passes on opportunities and doesn't see them in the first place. But I don't really do much with the real estate sector, to be quite honest with you, as a trader at least. But working back down into here still, I think what's ideal. This is a tough candle to trade, into tomorrow. Again, if we see that upward movement, we could argue that it was a bull pullback and confirmed by upward movement tomorrow. And I wouldn't put up much of a fight for somebody making that argument. A hard time seeing that being a great trade, though. I do think it would be, ideal to have a little bit more of a traditional pullback, and maybe that's asking too much. Maybe it is, but a little more of a traditional pullback, slowing down as we work back into resistance. And I will be open to that, and that is what I'm watching for. If we just shoot back up, good luck and best of good well wishes to anybody trading that sector. But I think, for me at least, I do need kind of that nice traditional pullback to the breakout point to really be, overly interested. And lastly, over in the communication services, I mean, this one's rough too, right? I mean, this chart is not pretty, but we did see some upward movement here today. Again, this has just been an area that's been kind of beat up as of late. And while other things have been maybe showing mixed signals, we've seen some bullish signals over the last couple of weeks in a lot of different areas, right? Obviously they weren't huge, green flashing light type of signals, but we've seen things. Then you have our friends in the communication services sector that really, what have they done? They've done nothing. They've failed the resistance. They've been making lower highs and lower lows for their entire existence, basically. And I know they're new, so it's not their fault, and their entire existence isn't as bad as something else that's been trading for 50 years. But right now, I have a hard time looking at this as really anything other than potential bearish opportunities within this sector as a whole. But this sector, I'm still figuring it out too. There's a lot of things that don't necessarily things like AT&T and Verizon. Well, I'd be open to those, and have things like Google and stuff. I don't know how I feel about those right now. So a little bit of a weird sector. It seems in some ways, I mean, I think I get why they did it, but it seems kind of like it's an interesting band of characters in that sector. But as of right now, it's showing a lot of weakness. We really haven't taken out any levels of resistance or anything for a very, very long time. And I think if you're interested in the sector, you're looking at it from the point of view is, hey, if it's got some strength, it's going to be able to work its way back up. It's going to be able to break through some resistance. It's going to be able to show us some buy signals. And with the type of companies that are in here, there's still going to be some upside. So for me, way up here is the buy. It's still the resistance too. If I'm bearish in it, I'm bearish with my stop way up here. So right now, it seems like there's, to me, not a lot of great trading opportunities collectively, at least, over in the communication services sector. The dollar's not boring. It's not done anything now for 2 straight days, but it's not done anything in a very interesting fashion, right? We've seen big runs to the upside on the intraday, big runs to the downside on the intraday, only to close right around that $97 the last 2 days. It's trying to figure out what it wants to do with itself. Not a very clean signal. Again, I will not really argue with people looking for entry points off of that 97, that old breakout point. I do think that's a perfectly reasonable technical thing to be doing. But there definitely is some increased volatility right now. I think we have to admit that. We've seen really 4 big candles this week, right? We had the big breakout candle. We had the big give it all back candle. And then yesterday and today, we've seen a ton of movement on the intraday, even though, yeah, we closed pretty flat. We did it in spectacular fashion. It seemed a little more volatile than I'd like it to be right now. But again, no one's ever accused me of being the world's bravest trader. And so as long as we hold 97 and really this trend line, I think this is really, as long as we're above here, you can look at this, and I will at least be looking at it through bullish eyes. A violation of that trend, I can change my opinion really quick. A break of this trend and a break of this, low down here, I can definitely change my opinion really quick. But right now, those things, are potential things in the future that may or may not happen. So I think, 97 is our first line of defense, as it's kind of been showing lately. And then our trend line that we've been dealing with is kind of that second level. I mean, we've got moving averages and stuff holding us up between here and there. So it'll be interesting. But boy, what a way to not go anywhere. 2 straight days, but it's been interesting. Over in gold, kind of smashing. We're still trying to fight our way back above that 1220. Those of you who've been following gold for a while or who've been hanging out with me in the recap for a while, we said 1220, dozens of times back through here, right? So we're used to it. Whether we're tired of hearing it or not, I don't know. But 1220 was such a big deal. We continued to run up. I think we're topping out the intraday highs last 2 days have been around 1217. But I really think, if you're thinking about, this bullish, you got to get back above that 1220. I really personally think that this is an area that it's a cash flow area. It's a neutral directional area, really within all of this range. I know not everybody's going to feel that way, and that's fine. But really, I think as long as we're here, let's go sideways for a year gold. That would be cool. Cash flow gold, GLD or something like that for a year, sell options on the futures contracts on gold if that's your thing, and then break out after, next September. That'd be lovely. I might be asking too much. Even by my standards, that might be asking too much. But really right now, the prices are all the same. Our main support down here, we've got this major 1220 area that's acted as both support and resistance. And then we have our 1240 area where we have our current level of resistance. Do you want to play in the middle? I guess that's the question. And I don't like to play in the middle personally. Over in silver, a nice little rally back on the silver market, kind of closing back kind of right where it was using support. Again, much like gold, if we can work back up in there, you can make a case that this was just a failed breakdown. We see failed breakdowns. It's not like they're the rarest unicorns ever, right? Things, break down for a day or two and then reverse and work right back into their old pattern. If we're able to work back into that pattern, fair enough. I wouldn't have any problem with people looking at it that way. But again, I still think, with silver, the real signal is at 15. I really do. I felt that way for a long time. Those of you who know me know that. And I really think that is the place. I mean, intraday, there's really interesting opportunities, but I don't know. But again, that's me. I'm wimpy. If we can work back and get above this, you can start to argue that we're just right back in this range. We're catching it near the low as we work our way back up to resistance. And well, I could understand that. I really could. Of course, we got to do it first, right? Of course, keep an eye on that 14 because, again, we just, had a couple of updates. We haven't done this yet, right? Those are things that might happen. We also might get knocked down off of the resistance level on gold or on silver as they give up the fight. Silver's a little tougher right now because the 14 is such a round and psychological number, and I've heard it many times over the last little while. So it's not just a me thing. I think, from a bearish point of view, if we're, getting in up here, or if we're getting in, if it does rally back up into resistance or whatever, I guess it doesn't matter that much. But if we're, looking for it, to come in as it's moving back down, it's a tough gauge right now because I can't say exactly the number it is. It's one of those things I think I'm going to know it when I see it, but it's got to cleanly break below 14. And that's very vague, I know. So we'll see it together. Whatever happens, I'll tell you when I think it's happened. But really, not a lot has changed. These are big challenges, right? We saw these be support levels, resistance levels on multiple occasions. It's not like silver's just entitled to blow right back above that. That should put up a little bit of a fight as it has here, at least on today's intraday. Over in natural gas, we gave it back and then some, closing right about that 9 EMA here today. I mean, what a crazy couple of days. But hey, good. I wasn't in natural gas, and I hope those of you who may have been were able to get profits, of course. But selfishly, I wasn't there, and I would like to have a pullback opportunity. Obviously, it's not after a day like this. Just like after a day like yesterday isn't a technical day to buy, right? Even though sometimes you get away with it, right? Sometimes it does continue that momentum. I don't think that's how we're going to make a long-term trading business work. Let's continue to watch it, pulling back into this old breakout point. Let's go to a weekly really quick, actually. That would be probably, a good spot. That old breakout point, we're not too far away from it. That would be a very interesting price point, in my opinion. We may not work. Let's just kind of see how the next couple of candles work into the weekend and into early next week. Can't really see a directional swing trade on natural gas tomorrow. On intraday, maybe. We can definitely go in and look at things from an intraday point of view for those type of intraday trades. Nothing wrong with that. But swing trades, well, best case scenario at Doji's tomorrow. That would be what I would consider the best case scenario if it doesn't want to pull back any further. And then hopefully we get a nice entry, on Monday or Tuesday. But I won't be, we'll see. There's people taking profits clearly right now, and understandably so. I mean, if I were in natural gas yesterday, the first sign of trouble today, I would have ran screaming like a maniac. I don't know. I would have been out before yesterday happened. I'm a whim. Lastly, over on crude, we've shown that it's not guaranteed to always drop, right? We've now rallied 2 days in a row off of that support level. Obviously, you've got to be a big believer in crude to be playing it off of that support level. But again, I always like to respect support, even though I might not trust it. And both support and resistance. I really think right now you're just watching for the retracement. When we get into challenges, once we work into some moving averages or develop an intraday ceiling or a little intraday floor, however it ultimately plays out. So I think, again, this is one of those that, hey, if you've been in crude as a bear, you don't want to ever sit through a pullback, right? You probably loved the last couple of weeks, but you knew a pullback was inevitable at some point. It was going to have at least a half-hearted retracement, and now we're 2 days into it. I would love to see it work back into 58. That is what I'm pulling for. Work into 58, and let's see what it looks like from there. Of course, anytime you're dealing with something breaking support, anytime something breaks support, it's a sell signal. Whether or not you're interested in taking it, a lot of times you're not. But I will maintain that anytime something breaks support, it's a sell signal. Anytime it breaks resistance, it's a buy signal. It's just, is it enough of a signal? Well, I hope we get the retracement to 58 so we can have that discussion. But I mean, hey, we know how bad it's been in crude. No reason to think that, hey, this is the magic day where it's all going to turn around. You have to take out some challenges for us to even think that. So interesting to see a couple days. I'd love to see one more, and then we can start fresh next week. So that's what I'm pulling for over in the crude market. So that's where we find ourselves, ladies and gentlemen, after an interesting day. Like I said, I do think that the bulls really needed this one with just the placement on the charts. I mean, yeah, we've been selling all week, so they needed one just morally for some morale, I think. But I think when we were looking at so many of those charts, they either had to step in or they were going to see the patterns that they were looking to develop completely wiped out. And it's just one day. Now we've got to get follow through. And again, we've seen plenty of lack of follow through the last little while, so let's not assume that that's guaranteed to happen. But it's a good first step from the bullish point of view. Showed that at least they have a little bit of life. It'll be interesting to see where this day takes us tomorrow. So with that, ladies and gentlemen, as always, it is certainly my pleasure, and I do appreciate everybody's time. Be sure to sign up or join us over on the YouTube channel if you haven't already, and hit that notification bell, and be sure to follow us over at Tackle Trading on Twitter to keep up with some of the things that we're watching out for on a day-to-day basis. If you enjoyed the market recap, it is always helpful and appreciated if you give it a thumbs up to let us know that it's helpful for you and that we're on the right track over here. With that, ladies and gentlemen, as always, thank you so much for your time. Get out of here. Happy trading, and I will see you all in the next one.